answer the following questions relating the income statement. You know, a lot of papers will have short questions like for 4 marks before they start stuff. So just make sure that you know your theory, okay? Because this is easy marks. What purpose does the income statement serve in the books? So the income statement calculates the net profit for the year, isn't it? The Companies Act makes it compulsory for companies to publish their financial statements. Why? It's about transparency, ne? And why? Because the public provides the shareholders, the people who's going to invest. Anybody can invest in that company, so they need access to the information. Don't write off my stupid answers here. Go look at the memo you got. Oh, you don't. Sorry, ne? Briefly describe the matching principle of GAAP. So matching is I match income expense to time we have it. And that would be example depreciation for 3 months, because I only had the vehicle for 3 months. Another one for matching, there's 2 parts to matching, and they sometimes call it accrual also. So the other part for matching is you say they match the income with the expense in the same timeline. So in other words, that's why they say sales, cost of sales, because they're matching the income and the expense. See? Difference between receipt and income. Receipt is cash, and it's not limited by time. So if I received it in this year, but it's for last year, it's still receipt this year. Income is contributing to your profit, and it's strictly within my financial year. What's applicable for my financial year. Okay, let's match concepts. So I've got current, financial, equity. Can you see they're testing if I know the face of the balance sheet? So the amount due to such is a current liability. Consumable stores not used is mostly inventory, so it's a current asset. Mortgage bond to finance is a non-current liability, it's a long-term loan. Investment as fixed deposit is a financial asset. Trading stock deficit is mostly expense, it's not there. A distributable reserve, can you see? As retained income is equity. Because if you look at your face of your balance sheet, they must say capital and reserves, or they say shareholders' equity, and under it they say ordinary share capital, retained income. So it's an equity. It's a part of the profit the company didn't use. Okay. So they want me to do the ordinary to calculate the correct net profit. I told you not to do it, because I want to explain to you. So what they're going to do is they're going to give me a net profit. This guy already set up the trial balance of the income statement. You already got a net profit, but the net profit is wrong because they didn't take certain things into account. Okay, now if you read, you want to see, is it the whole amount that they didn't take into account, or is it just the adjustment? Let me explain. The whole amount would be, let's say they didn't show trading stock deficit at all. You see? Then you need to bring the whole trading stock deficit into account, or they didn't calculate depreciation at all, then you have to bring into account the whole depreciation. The adjustment would be if they showed, let's say we had insurance, we paid insurance 1,000 rand, of which 100 rand was prepaid, but we only showed the 1,000. Can you see now we just need to fix the 100 prepaid that they didn't show? You guys get me? You are half asleep like me. So let me just quickly show you something. If I look at the information, there. Can you see they give me the wrong net profit before the following adjustments? Now if I read here, can you see interest on fixed deposit per annum is not capitalized, no interest has been received. So I need to go calculate the interest, you see? The next one, interest on loan has not been taken in. So it's the whole adjustment. Provision for bad debts, the whole adjustment. Rent received, blah, blah, blah. Only the adjustment was not taken into account. The trading stock was damaged. We have to take the whole thing into account. Insurance included, so they show as an expense the full 8,400. But a part of it was prepaid. So I showed too much. Does that make sense? Let me do it for you. Can I quickly ask, Gordon? If I look at this, calculate the correct net profit. Okay? Now, net profit as per profit and loss. So the fact that they say it's as profit and loss, it means it's before tax. Net? Because if I do the profit and loss C account, net, it's most not tax included. Where do I calculate the tax? Only in the appropriation. Okay? So, in other words, what they're saying is if I have appropriation, I must have profit and loss, tax, dividends, retained. They're talking about this one. Can you see it's before tax? Okay. Now they say the following things, oh come on, Poppy. The following things like this were not taken into account. So we need to fix the profit. Interest on fixed deposit is earned. Now, before I start with that, let's just in our head go back to the format of the income statement. So the format of the income statement, and you can shout it with me, sales, less debtors allowance, cost of sales, gross profit, operating income, gross operating income, operating expense, operating profit, interest income, profit before interest expense, net profit, and now we have before tax, net profit after tax. Now, I want you to quickly see this. All my income stuff, all the income stuff works with the profit. So if I have accrued income, what does it do to my income? It makes it more. What happens then to my net profit? It becomes more. Income received in advance will make my income less, meaning my profit will be less. Now let's look at expenses. Expenses is going to be the opposite. If I have an accrued expense, it makes my expenses more. What do I do with expenses? I subtract to get to my profit. So what happens to my profit? It's going to become less. Okay? If I have a prepaid expense, it makes my expenses less. What's going to happen to my profit? Become more. Let me show you an example. Let's say my net profit is 10 Rand. Okay? I subtracted 5 Rand expense, so my profit is 5. Now I say to you, oh, the expense is actually not 5, it's 4. Ne? Ne? So this is 4. So what's happening here? You see what's happening? Okay. So, interest on fixed deposit is earned 10% per year and is not capitalized. That does not matter for the income statement because any interest you show. No interest has been received. 40% of the fixed deposit will mature 30 June next year. Ne? If I look, my financial year ends 30 June 2020. This one matures 2016. I'm at the wrong exercise. Sorry, ne? I see the fixed deposit is 2015, meaning my year is 30 June 2016. Oh, my year starts February, so it's going to be 2017, so it's the next year. Or even if it's 2016, it's also after, oh, I'm tired. It's also after the financial year. Are we right? Okay, thank goodness. So here we go. We're not going to work with this because this is after my year already ended. Ne? Remember, my year ends 28 Feb 2016. This is after 28 Feb. So I'm not going to worry about that. I'm going to worry about the 10%. So let's go look. What's my fixed deposit? It is 280. 280 times 10% gives me 28. So can you see, why will I add it on my profit? Why does it make my profit more if I didn't bring it into account? Because what is interest on fixed deposit? It's an income. And if income becomes more, what happens to my profit? It also becomes more. So it's a positive. Be careful, this one they mark with the sign. So if your sign is wrong, your answer is wrong. Interest on loan, also taken into consideration. Interest is capitalized. All they're saying to you is, if I do my loan T, I can calculate interest. Opening and a closing and a bank and an interest on loan. I'm looking for this one. So, let's go look. The loan statement, I have an opening, I have a closing, a payment, and I've got a closing. So what's my interest? 48,000. So now it's an interest on loan. 48,000, is it positive or negative? Positive. Because it's an expense, and if the expense becomes more, the profit becomes less. Okay. Next one. Provision for bad debts must be adjusted to 5%. Okay, so I know I'm going to have provision for bad debts adjustment. Right. So let's see. My debtors control is 36,000. Am I right? I'm adjusting it to 5%. So what is my provision? 1,008. This is the old one. The new one. This is the new one. The old one is 1,009. Okay. So, is this 100 going to be positive or negative?
Negative.
Positive.
Okay.
Why positive? Because 1008 minus 1009 gives me minus 100. That minus indicates that it's a income. We are now knowing if the income becomes more, the profit becomes more. Everybody sharp. Can you see how you need to think? Okay, so I must calculate the new one, and then I subtract the old one. Yeah, I'm there. And that gives me a minus 100. So remember, in my calculation, a plus indicates expense and a minus indicates a income. You remember? Okay, you sharp now. Yes. Okay, what did you write here? Then it's wrong. The moment your sign is wrong, even if this counts 7 marks, the moment your sign is wrong, you miss all 7 marks.
Like what I'm saying, like I know it's really for me, I got to think it's a negative, but then I got the answer like 100, so negative is negative. Can't write a negative as a negative.
No, you can't write a negative here, unless you make that a negative, and all your brackets is swapped. But I don't know why you would want to do that. Okay. Rent income, ne? Amounted to 52, and here we've got our beautiful 10% thingy. So I'm just going to say rent income. I'm not going to say accrued income, prepaid. I'm not going to worry about that now. So they go from the assumption that you took the rent and added the full rent to the profit. You did not take the adjustment into consideration. So it's only the adjustment you didn't take in. Sharp. So now let's go look. They say it's 52,560. So included in that amount is the 52,560. So we only need to add if there's an accrued or subtract if there's a prepaid. Only those part that is an adjustment. So they say it's increased by 15%. So if I do this, I see, okay, my year ends 28 Feb. It's been paid for March and April, so it's definitely income received in advance, which will make my rent less, which will make my profit less. Sharp. If I go further, I see it was increased 1st Jan. Okay? So 1st March till 1st Jan gives me 10 months. 11, 12, 13, 14, 4 months. Okay? So 10 at 100, 4 at 50, 115 gives me 1,000 and gives me 460 gives me 1,460. Now let's quickly go. I take the 52,560. I know I'm going to divide by the 1,460 and I'm going to times with the weight of the months at the end, which is 115, 115, because it's after the increase. So it's 230, and that gives me what? 280. You know, and in these days they give you 2 ticks for that, because they say that this calculation is low order because it's grade 10 work. So you better figure it out. Okay. The trading stock valued at 14,000 was damaged in the storm. So I'm going to have a trading stock, not surplus, ne? Loss, ne? Because of the storm. And what am I going to do? I lost 14,000 The insurance company is going to cover 70%, meaning I'm going to lose 30%. Does that make sense what I'm saying? Okay, so that gives me what? 27. What does it give me? 42. 42. And why in bracket? Because it's an expense. Can you see anything making my profit less? Now, what do I know? Did they give me trading stock? They didn't give me any info on trading stock. If they did give you info on trading stock, you had to go draw a T to calculate trading stock deficit or loss. Ne? Okay. Insurance included an annual premium of 8,400 annual. How many months in advance? It's paid 1st August, meaning it ends next year, 31st July. Yes.
For the trading stock, does it matter when it's processed? It's paid.
No, because that would be that 70% that I'm going to receive is going to be a accrued income. It makes my loss less. If I can show you quickly, you would have a T for trading stock, a T for accrued income, and a T for trading stock loss. Okay? So you lost 14,000. Ne? So your stock becomes less worth 14. If you had absolutely no insurance, your loss would be 14. But now the insurance is going to pay out 42. What is it? Sorry, what's 70%? 9.8. So the insurance, we are waiting for it. So my loss is not the full 14, it's just the 42. That's how it would look like. And that accrued income would go to receivables, and that 14 will be subtracted from inventory. Okay, so let's look. How many months in advance? They say 1st August till 31st July. My year ends 28 Feb. So, March, April, May, June, July, 5 months in advance. Or I can say August, September, October, November, December, January, February, 7 months in the year. So, but then this doesn't make sense. No, it does. 7 months in the year, mustn't it be 8? Help me here. August, September, October, November, December, January, February, 7 months. In advance, March, April, May, June, July. Oh, 7 and 5 gives me 12. Okay, I think I must go. So here we go. What's advanced? 9. So 355.
3,500.
You said 555. Where's the 555? So we can explain why I don't put a bracket.
Because it's going to cover
That's an expense, but you make the expense less.
It's a prepaid expense. Prepaid expense makes your expenses less. If your expense is less, your profit is more. Because in this wrong one, I subtracted the full 8,400. Can you see I overstated my insurance expense? Does that make sense? But 3,500 is not applicable on this year. It's only applicable next year, so I'm counting it back. Shapna lady? Okay, where did I lose you? Okay, so it's like this, ne? So let's say my profit was 10,000. Now I tell you my insurance is, what was it? 8,500. 8,400. So now my profit is 1,600. That's how I showed it in my books. Now I say to you, oh, but you know what? Part of that insurance is not for this year. Because if I look at this year, it ends 28 Feb. A part of it, how many months did we say? 7 months is for this year, but 5 months is only next year. So I don't want to show the full 8-4. I only want to show the 7 months. You see? But now I can't go work out the 7 months. Okay? If you want to, let's quickly work out what's 7 months of 8-4. Huh? 900. So actually, my profit should be 5,001. You see? But now I say, oh, okay, I can't do that because the total of the profit is already including this. You see? This is if I didn't include it. So now I say, okay, how much of this is prepaid? So I work out 3,500. Can you see? If I say 8,400 minus 3,500, I'm going to get 4,900. And can you see the effect of the 3,500? It's making my profit more. Are you with me now? You guys with me? Okay. So, next one. Director's fee still outstanding. So it's accrued, ne? So it's going to make my expense more, which means my net profit is going to be less. So, what else do we need to do? What does it say there? After tax, ne? So, we still need to deduct tax. And the tax, they say it's 268,400. So what's my correct net profit?
702,300.
Everybody sharp. Okay, let's do the capital. I'm going to stop this one here.